Okay, so we are in this situation. Let's try to analyze in a different perspective, as we have seen that we have got a double top, and now there is one more situation. As you know that on this day the market had gapped up, and on this gapped up you can consider this as a pullback, considering this as the first leg, this as the second leg. Okay, and in this second leg, this is first leg and this is second leg. So now coming to this point, as you can see that bar 33 just went below bar 23. So you can say that there were tremendous buyers who were just waiting for this to occur, so that the stop loss of this bulls get trapped over here and new bulls get entered, and these are the bears who have taken a short entry will also get trapped below this. And maybe it can be said that this bear has their target. They came to know that the market will definitely going to test this 23 low, and as you can see that yes, it has successfully raided 23 low, and it formed a bullish engulfing pattern. You can say that this is also a double bottom, and this is a bull flag. So there is a very good probability of buying above this with 10 to 10 rupees of stop loss, and as you can see that it has completely broke this high. Now we are looking once if we have missed this opportunity, now we can see that this is a breakout. Okay, now we will like to see that let's go for a buy of in a pullback. So we would like to go on a high one or a high to buy setup. Okay, so now the bar 35 is a bull bar, by 36 bar 36 is also a bull bar, and now it has started to pull back. 37, 38, 39, this has pulled back. Now buy above means this can also be a signal bar, because the low of the high of the 37 bar is below this, but this is a what you say is a red bear candle, so we should not go above, buy above this candle. 37, this 38, yes, this both can be a good signal bar of a pullback in an H1 buy setup. Now 39 is a very good setup for a pullback. As you can see that if we have bought above by 39, there are chances that our 10 rupees stop loss might have hit. So in a pullback, this is what you should consider, that we can go for H1 buy setup or we can go for H2 buy setup. Now bar 41 is a perfect H2 buy setup. Now this is also a consideration that once we go price means if you can see that price open at this level, it went up, it went down and closed below this. So you might have entered on this high, and because this has happened, so before putting a 10 rupee stop loss, we should come to know that it is better to finish the candle and see what happens in the next candle. So sometimes putting a very strict stop loss is also dangerous, because it will step out of a very good trade. Now as you can see that after that, I think I have took a trade of selling put at 12:30. Okay, so I have took a trade. So as you can see that my trade has been generated on 12:30:36. Once it has broken this bar and I got entered, and I have sold P at 256.3. okay. Now what happened is, because my target was a high one and I got out at break even. As you can see that I got out at break even at 1 o'clock 12 minutes. I will show you where it is. As you can see that I got out at this green candle. So on this green candle I have placed my stop loss at break even and I got out. But so now it was my luck or whatever you can say, but I don't want to risk any of my money. If I got at break even, I don't mind. Now just analysis another thing. This is a very bull bar, a bullish engulfing bar, and as you can see that there are 3 push up. This is the first push up to move the market up. It came down to bar 41 and it came up till bar 43, and there is a small pullback and it went up to this bar high of 49. Now as you can see that this is a place where there was a double top and this could not go above this high, and as you can see this is first push, this can be the second push, and this is the third push. Now this is a very good simple setup that buyers want to go up, but the sellers in this area has completely overturned the bulls and they have taken the control. Now this is a very simple, you have to go below this bar 49 and sell CE, but I didn't took the trade and see what happens. Okay, so this happens, and just risking 10 to 15 rupees you could have made around, I don't know, 80 to 90 rupees of profit. Okay, now again, if suppose we have missed this trade, now we can look for a pullback. Okay, now we are looking for a pullback, and now again I would like to tell everybody that we should never ever try to judge this small counter trend, because this is the most dangerous thing to do. This will psychologically make you happy for a little time, but eventually you will fall for this trap. You will enter at the low of this, you will enter at the low of this, and you won't, and at this time you won't put a stop loss, and you will, I have made huge losses just my brain was thinking just take 10 rupees 15 rupees profit, but I have made many losses, small losses, big losses, just entering. And this will, what will happen is, when we are trading counter trends, there is an urge to average the position. In this case, if I have sold PE and I would think that it will come to this level and I will take 10 to 15 rupees profit and I'll get out, and if it doesn't happen, I will again start building up and averaging up and making a huge loss. So this is my simple request, please do not ever try to take this counter trend. Okay, now let's think at this as a pullback. So this can be our low one sell setup, this can be low one sell setup. This is a signal bar, and it might have, if I have taken it, I might have gone out at this 10 rupees stop loss. I haven't taken this trade, I just have took 2 trades and then I have not traded further. Even this is a bull bar, so it is not recommended to sell below a bull bar. And as you can see that this bar has overly taken an engulf. Now there is a probability of this, that this can be a major turnaround and it will go up, but no, never, we should never try to buy above this or go long above this. This looks lucrative, but this is all trapped. Okay, now after this, so now where is our next sell signal is setting up. Now this is bar 61 is a sell setting signal, and below this we will enter. And now because the high of the previous bar has not been tested, we should not put our stop loss just 10 to 15 rupees. If it could have gone above this high or this high, I think we should get out of this trade. But as you can see that it didn't happen, and I didn't took the trade, and this was a pullback, and you can see that this is the first leg and this is the second leg, and this is the end of the day. And I think it's better to not trade. If you are in a position and you want to cover up the thing, then it's okay. But at this point, when we are 2:30 and we are entering late, we should avoid a new trade. So this is my part 2 of the analysis on 1st April 2026. See you in next